Silver has emerged as one of the strongest performers in global commodity markets, delivering a rally that few investors anticipated just a year ago. Over the past 12 months, the metal has surged nearly 160%, lifting prices to around $80 an ounce and placing silver close to record territory. The move has reignited interest in precious metals among investors, seeking protection against inflation, currency volatility, and economic uncertainty. It has also propelled silver mining stocks sharply higher, with few companies benefiting more than Hecla Mining. Shares of Hecla Mining, the largest silver producer in the United States and Canada, have risen more than 330% since early January 2025, dramatically outpacing the gains in the metal itself. The stock advanced another 7% in the latest session, moving in step with silver prices and reaching record highs near $22.50 a share. The scale of the rally has drawn fresh attention from investors and analysts alike, raising questions about how much upside remains after such an extraordinary run. The broader silver mining sector has enjoyed strong gains, but Hecla's performance stands apart. Pan American Silver, one of the industry's most established names, has climbed roughly 150% over the past year, largely tracking the metal's rise. First Majestic Silver has advanced more than 220%, reflecting its high sensitivity to changes in silver prices. The Global X Silver Miners Exchange-Traded Fund, a widely followed benchmark for the sector, is up about 170% since January 2025. Hecla, now the fund's fourth largest holding, has significantly outperformed them all. Investors have been drawn to Hecla for more than just rising silver prices. The company operates long-life mining assets in politically stable regions of North America, a factor that has taken on greater importance as geopolitical risks have increased elsewhere. Over recent years, Hecla focused on strengthening its balance sheet and improving operational efficiency, positioning itself to benefit when commodity prices turned higher. As silver surged, those efforts translated into sharply improved cash flow and profitability, reinforcing investor confidence in the company's strategy. Wall Street analysts broadly agree that Hecla's earnings outlook has improved materially. Forecasts now suggest the company's net income could nearly double in 2026, driven primarily by higher realized silver prices and operating leverage. That earnings momentum helps explain why the stock has continued to attract buyers even at elevated levels. At the same time, the pace of the rally has introduced a more cautious tone into analyst commentary. Of the 9 analysts currently covering Hecla Mining, 4 rate the stock as a buy, while 5 recommend holding existing positions. None have issued sell ratings, but the split reflects growing debate about valuation. Hecla now trades at roughly 30 times projected earnings for 2026, a multiple that aligns with its 5-year historical average. While this suggests the stock is not wildly overvalued by its own standards, it also indicates that much of the anticipated earnings growth may already be reflected in the share price. That concern is evident in analyst price targets. According to consensus estimates compiled by FactSet, the average target for Hecla stands near $15.50 a share, implying a potential decline of more than 25% from current levels. Even among bullish analysts, expectations remain measured. Michael Cyprico of RBC Capital Markets, who rates the stock a buy, has set a price target of $19, the highest on Wall Street, but still below where the shares are currently trading. The outlook for Hecla is closely tied to the future path of silver prices. If silver continues its upward trajectory, analysts may be forced to revise earnings estimates higher, which could in turn support higher price targets for mining stocks. In that scenario, today's valuation concerns could ease. However, some market observers warn that silver's recent strength may have carried it ahead of underlying fundamentals. Silver has begun to diverge from its traditional relationship with gold and other commodities, a development that has raised eyebrows among seasoned investors. Silver has deviated from its linkages to gold and other precious metals, said Yung-Shin Kung, Chief Investment Officer of Mast Investments. There should be more convergence. Silver has been unexpectedly strong. Such divergences, while not uncommon during strong rallies, can signal heightened risk of consolidation or correction if market sentiment shifts. For long-term investors, particularly those focused on balancing growth with capital preservation, the current environment presents a nuanced picture. Hecla Mining is a well-established company with tangible assets, improving profitability, and direct exposure to one of the strongest commodity trends in the market. At the same time, the stock's sharp ascent has reduced the margin for error, making future performance increasingly dependent on continued strength in silver prices. Hecla's rise has become one of the defining stories of silver's remarkable year, rewarding investors who positioned early in the rally. As silver trades near historic highs and mining shares reflect elevated expectations, the next phase may prove more volatile. Continued gains in the metal could sustain the momentum, while any meaningful pullback could expose silver miners to sharp declines. For now, Hecla stands as both a symbol of silver's extraordinary resurgence and a reminder of the risks that accompany powerful commodity rallies. Whether the stock can continue to climb will depend less on past performance and more on whether silver ES surge still has room to run.